Hello, everybody. We are FXStreet and we are in our live coverage of the Federal Reserve interest rate decision. This is the last meeting this year, perhaps it's the first meeting with a hike rate. Hello, Dale, and hello, Johei, and hello, Miss Valeria Begnarin. How are you guys?
Hello,
Everybody.
Maury.
Hi.
Doing good?
Hello,
Good.
everyone.
Ready?
How are you?
Let's do it already.
Yeah, finally.
I feel like I've been pregnant waiting for the birth of an interest rate hike. How
9
about
years,
you
9
guys?
months, yeah.
Almost a
Three
year.
threes,
Yeah.
buddy.
Yeah.
Yeah, finally. So, Valeria, what we can expect today from the Federal Reserve?
Well, I guess that the most, let's say, less shocking scenario should be the fact that the Fed will raise their rates by 25 basic points and will state in their statement that they will be cautious with next moves and they are going to be gradual and will ask the people to be patient again, data dependent. I guess that's what we are waiting for to be the most likely happening and therefore the less market mover, right?
Right. Okay. Thank you. So, Johei, I know that you make a great presentation this morning in your show. Can you explain us something about that? What we can expect in the Federal Reserve, or what will Janet Yellen doing in the last days?
Well, it's as Valeria said, the rate hike is expected because Janet Yellen said so. She said delaying the liftoff has risks. So we're looking to see how many rate hikes we'll have in 2016. How gradual it is, as Valeria said, data dependent. And we can get a message from that from the dot plot. And this dot plot refers to the interest rate at the end of 2016, 2017, and the longer run, the future. It has been 1.4 for 2016. I believe it'll be lowered just a bit. If it'll be lowered just a bit, I think the market will accept it. It'll be relatively okay, even hawkish. Even if they cut it a lot, one and done or almost one and done, then it will be bearish. So this is, I think, the first immediate thing to watch with the release of the interest rate decision, with the statement. That will, of course, try to, on one hand, show confidence, because they're not raising rates if they're not confident, right? And on the other hand, calm markets say that policy will remain accommodative. So these are sort of the main things to watch in the first minutes.
Okay. So, and then what do you expect from today action?
Everything.
Everything.
And anything. And Yohei is really top shelf when it comes to fundamental breakdowns. So much more of a technician. To me, it's an event to possibly position myself based upon market reactions. But it's so conventional that they're going to go a quarter and clothe it in a dovish statement. So I think that's what the market, most market participants are expecting. So any deviation from the 25% interest rate hike with an extremely dovish statement saying it's going to be gradual, that's where I think we get some bigger reactions.
I see.
But really not my wheelhouse to try and predict exactly what the Fed is going to do, or even to predict how a market's going to react to whatever happens on an NFP or Fed day, but be prepared to execute should the market offer some opportunities afterwards.
I know that you were talking about some euro-dollar both at kind of some level. So what do you expect? What is that level? What was the level that you were talking about in your show, Dale?
Well, actually, if they construe it as dollar bullish, I'm actually looking for under the 108 handle. But I'm looking at a candle right now. It looks to be, accelerating to the upside. Dollar selling off a little bit here. So I'm not impressed with this formation. I'd like to see Euro trade down under 108 towards 107.50 for an intermediate term buy. I'm still in the camp that I don't think we're going to take out the Draghi low or the March low. So a break into that area, there's a lot of fib, a lot of confluence. I'd look to be a buyer there. I still think we're going to take out this 110.5, 110.80 level. I think 112.5 is doable in the next 30 days.
I see. So, Valeria, what are your levels to watch in any, well, you know, in the
Fair.
majors? Yes, in anywhere, you know, in the majors. Yes.
Fair.
Well, let's see where. Let's see. I know that you prefer the dollar Japanese yen. So, what is your take there?
Oh, well, the first level I will be rewatching to the upside will be that 20 level, which was the floor of the range between earlier November and early December, right? And the level that attracted many buyers. And now the key resistances. As long as we remain below it, I do believe that we remain bearish in here, despite the lack of momentum we are seeing. So I would like to see pair advancing above this level to talk about the bullish continuation. I do believe that a really hawkish stance is required to boost that much the pair, particularly because we have been flirting with the level earlier today, and the dollar Japanese yen already gave up all of its intraday gains ahead of news. Something I don't like too much to happen, right? If we were in a market that is betting for a dollar up continuation. Anyway, this is the level to break for me to saw a bullish run, right? And on the other hand, the main support for me comes in here, 21.10, which is the daily 100 simple moving average. I was watching earlier this week that the pair remained below it, was unable to recover until finally breaking higher, right, and extending and rallying. Okay, so if we break back below this level, I would anticipate bearish continuation far below this 2030 we saw this week. So those are my levels to watch for dollar Japanese yen. Any breakout of those extremes should lead to some for me.
And what about you, Johei? What is the where takes your eyes, your focus today ahead of the Federal Reserve?
In terms of, well, spoke about euro dollar and dollar yen. Maybe I'll talk about commodity currencies. Dollar CAD is, of course, the weakest link because of oil prices. So if the Fed has a gloomy message for some kind of reason, I think the loonie is the most vulnerable one, and the Kiwi is the strongest one among current commodity currencies, with the Aussie being in the middle. I like the Kiwi because of good economy there, rising milk prices, and 69 is the level to watch. If we have a confident and supportive Fed of the economy, so that would be a level to watch on Kiwi dollar. On dollar CAD, if we have sort of a more cautious, scared message, then basically the sky is the limit. Currently we're at some kind of support, but it's a bit choppy, so I would look for even 140. So yeah, and euro dollar, of course, will be interesting, but, and dollar yen, but they've been covered, yeah.
I was watching the Aussie. There's a huge resistance static level around 72.40. We are really close to it, and I do agree with you, Ohai, that yes, the Australian dollar is probably the strongest currency today, and the one to watch if we have a negative outcome for the greenback of this meeting, right? And we are pretty close to that level, so if we break above it, I would like to just buy the Aussie. That's what I was trying to say. Anyway, 20 minutes to go yet, right?
Yes, 20 minutes.
I was seeing that oil gave up almost all of these 2 last days' gains, right? On strong stockpiles report.
Mm-hmm.
Yeah, I just want to make a point on Canada. If you could show my chart, Mauricio.
Yes,
I had this line drawn for a couple of days, and look at how it came right off a potential third drive line. And so this is with crude coming off. Why isn't it accelerating? So I've heard 140 targets, and I'd say if we got through 138.5, we could blow off there. But I'd be pretty cautious being long Canada now. especially if you get a dollar pop and it can't take out 8.5. Because I think that we're close for a bear market rally in the crude. It got to 35, 34, and it's almost as crowded of a short trade as the euro was before Draghi. So I don't think that 2-day rally in crude was really enough to shake out shorts. I think there'll be more upside in crude. I think it probably should be, with a weaker dollar, should be the supportive element for all commodities. Gold seems to be smelling it earlier. But to me, right now, everything kind of looks like a no trade. So, but I just did want to point out that we got to 38.50. There were some people talking 38.50. It came right off the line. So be careful. Be careful with everything, but I'd be careful. I think if it's not the 9th inning in Canada, it's the 7th or 8th in baseball terms.
Guys, Siva from the chat is asking us about gold, the levels to watch in the gold. So if you have any idea, perhaps Valeria?
Yeah, I have to be honest. I was watching that today's rally is more, I believe, like a position adjustment rather than a real recovery. And that I believe that if there's some place where a rate hike has been already priced in, it's here, right? So I believe that it's one of the most risky ones to trade today, believe it or not. Although I do believe that the bearish trend is still in place. I believe that the market reaction in here could be, I don't know, unpredictable. That's why I'm trying to say. Anyway, I have that small daily descendant trend line and these recent highs, all of which comes around 1080, 1079.50. So my take is that if somehow the commodity breaks above the level, we can advance some more up to this recent highs in 89 or so, but I'm not betting much in the upside, you know. I believe that if we saw a rally, it could be a better idea to wait and try to sell once the upward rally is exhausted and try to grab money into a bullish run. Anyway, and towards the downside in here, there's a support around 66, 65. Right, so my take is that if we fell back below 65, we can go down towards these lows at 58 and even lower, test the record lows at 46 we print early December. Okay?
And what do you think, Johai?
About gold, I'm not following it that closely, but I think has room for the downside if rates rise in general. But I don't have anything to add about technical levels after what Valeria said.
Yeah, we had Daniel Hussey on from Wave Forecast today, and he was talking a little bit about gold, and interesting that Val shows that resistance because through it, he was talking about 1120, and I noticed on your charts, Val, there was a glue moving average coming in around that same level.
1120 in euro?
1120 above that triangle line that you have. With a longer term chart than that. There you go.
1120.
Moving average.
Where's that come in?
1117, so pretty much.
Yeah, close enough for government work.
Yeah.
And he would like, if it got up there, it's a short in his view.
Yeah, I do believe that any recovery in gold should be a short,
Heck of a pop, though.
Yeah. Okay, there is another question here from Ben in the chat. Euro dollar. What will be the initial reaction? Depending of the Federal decision, but bull, bear, you know.
Oh, I know what to do for that question.
Okay, go ahead.
Okay, Ben. Anyone who answers that question, run away from them unless they're wearing Nostradamus glasses like this. Okay, because like I said, anything can happen. So why put the energy in trying to guess what's going to happen when the news is released? Because really, It's a red or black bet, unless you're Nostradamus. Put your energy into saying, well, if the euro rallies 150 pips, maybe that's a short for me. Or if we have a big dollar rally, maybe it's an opportunity for me to get long. But to put energy into being Kreskin, Nostradamus, anyone who says that they know how the market's going to react, they're probably not in the business, they're on the golf course, and they're a billionaire. That's my opinion.
Well said, Dale. Okay, so we are
But
okay.
people want to know. People do want to know that. And I don't know. How can you answer a question like that? Can you, Yohei, answer that question?
I don't know. I
I
can
know
tell
I'm
you in
being-
hindsight, I'll be 20/20 in hindsight, no?
Yeah, you're one of the best hindsight traders I know.
Yeah. Yeah. Back to the future, back to the past. This time machine thing. Still didn't figure it out, but that should be the answer. Yeah.
In the Twilight Zone, you get tomorrow's newspaper today. And
Yeah.
I think that's the only parallel universe that you get there. So we have to figure it out after the fact,
Yeah.
don't we, guys?
What I can say, my estimation, it could be totally wrong, of course, is that if we get a relatively hawkish dot plot, Yellen might be a bit more dovish to balance things out, because we've seen that in the past. But as we always say, I guess, is past performance doesn't imply a future one. So, as you said, who knows? Yeah.
She might say in the statement, guys, what do you think of this? We raised rates today, but please just pretend that we didn't. How's that for a dovish statement?
That's nice.
Just pretend that we did it, but pretend we did not. That's what you would like, I think. How about you?
Yeah, I think she's good at saying on the one hand, on the other hand, things like that.
She has more hands than an octopus, buddy.
Yeah.
So, Yohei, we are 10 minutes to go. So, what we need to pay attention in the decision?
The tone of the statement, which is, of course, open to analysis, how dovish, how bearish it is, how they see the U.S. economy,
The announcement
and the dot plot. Sorry?
Sorry, that the announcement will be 30 minutes later. We have in 10 minutes only the rates and the projections, and like 30 minutes later. Is that right?
Is she having a press conference today, Mike?
Yeah, in half an hour.
Yeah.
Okay. Market's recovering. I'm talking equities. Gold's coming off. So right now they're acting like they're going to like what she says. I don't know. Does she want a weaker or stronger dollar? I think she wants a weaker dollar. Hasn't she said that?
Well,
not recall. Yeah, go.
In September, they gave reasons why not to hike. They said the emerging markets, aka China, turmoil in financial markets, and a strong dollar. After financial markets calmed, suddenly also the dollar wasn't that much of an issue. So I don't think they're really worried about the dollar. They're worried more about stock markets. So yes, they would, for exporters, they would like a weaker dollar, but I don't think it tops their agenda.
Yeah, because the U.S. is losing the currency war that recently China has gotten into with both fists. What do you make out of the yuan devaluation, Yohei?
Well, I think if you really believe there's a significant slowdown, the yuan should be even weaker. So it's a natural course of events to have a weaker yuan. So, of course, it's primary season in the United States, and everybody's, especially the leading candidate in the Republican Party, Donald Trump, is using it. But I don't think. I think if the Chinese authorities really let markets trade really freely, the yuan would be weaker. Nobody is talking about the Swiss manipulation, for example.
Yeah, I've read, my readings say that a continued weakening of the yuan are the Chinese exporting deflation.
Yeah.
Do you see it that way?
Yeah, but they put a lot of stimulus into the system after the financial crisis, and they can't keep doing it forever. I think also the US did quite a lot, and Europe is sort of the sick man of the world at the moment. So I guess
Europe's the Ottoman Empire now.
Oh, about to collapse.
The sick man of Europe,
Yeah.
right? Isn't that? Yeah. Bill, how's it going with your new president? Is he sworn in?
Oh, he's doing great. I love him every day a bit more.
I know
Today,
that I know there's a lot of mining in Argentina. I follow a few miners that have properties there, and they seem to be very happy, less risk about nationalizing mines and so forth.
yeah,
So.
well, of course, he will favor his neoliberalist. He will favor.
What happened to your currency after his election?
They are
Well,
changing the forex condition, right?
What?
They are changing the forex condition, no?
Yeah,
change.
they will make a huge announcement in 2 hours from now. 2 hours after the. So I don't know what will happen, but the announcement.
Maybe they'll get rid of all the different colored money.
Yeah, exactly. That's the idea, to let it flow normally, like any other currency in the world, except.
Okay, so it's pegged to the dollar.
Yeah.
Okay.
The
that would be
official rate,
interesting.
but there's also an unofficial rate, right?
Yeah, we have an official, an unofficial, and one for exports, another for tourism, another for buying to save, another for we have like so many different quotations for the greenback in here, and we are not allowed to buy any foreign currency directly from the bank as you can do in any other country of the world. Until today, that we are supposed to leave that scam. As I said, we are waiting for an announcement around 6 o'clock local time in the afternoon, which will be in 2 hours.
Let me ask you this, Yohei. If they're right, if Argentina depegs, and they're not as huge of a commodity country like, say, Saudi Arabia and some of the EMs, if we begin to get a move of depegging from the dollar, would that create less demand for the dollar and weaken it?
In here, no.
If the Saudis did that?
I don't believe that will work in here because, you know, when you have a weak currency and corrupt leaders for so many years, the only value of trust we actually have is the greenback. And believe it or not, it's like that. You don't save in gold, you don't save in local money, you don't invert, you just buy dollars to keep your safe, you know? I'm not talking about me, but about the 100% of the country believes, right? So
people get paid and they convert right away.
Yeah, I do believe that it will take a couple of generations to change that way of thinking, and a couple of generations with trust in the government, right? Mm-hmm. And that things can be different. So far, no government has proved it could be different, so people will continue with that routine. If you want to buy a car or a house, I mean big goods, you're not going to ask, or you don't even know how much they're worth in local money. You know, you have the price in dollars. You said a house cost $1,100, 100,000. Sorry, the other way. Yeah. Cars 200,000, whatever. And how much is this car? 35,000. Okay, meaning, but it's always $35,000. You cannot imagine being told the price in pesos.
Yeah, it used to be like
in the millions, right? Mm-hmm. Millions.
What, Yohai?
I say it used to be the same in Israel until a few years ago, until the currency stabilized. And
well, yeah, I'm not sure. I'm pretty sure this government can stabilize the money, but I'm not sure if it can change our way of thinking after so many years of distrust.
Anyway. Hey, ever use a dreidel in making a trading decision?
Well,
I've tried everything. Magnets, moving my cursor on the screen. I was just curious.
So far I haven't, but you can try. You can never know until you try it out, no?
I'm having a course in it. If you're interested, you can sign up. Radal action trading.
Yeah, well, there are only 4 options there, so.
Yeah.
Okay.
Good one. Buy, sell, reverse, and put a stop in.
Yeah, or stay out, yeah.
Yeah.
Okay. So, Dale, do you? I know you was talking about how don't to pay much attention about guessing the decision, just to watching if the
Yeah.
pair go up faster, when to sell. So there is a question here. That is where to sell if the euro dollar goes a lot,
Okay.
rally
In the,
make a
in the
spike.
euro?
Yes, please.
Okay. I have a formation here that could still be fulfilled. Let me look at it. We had a 3-drive complete in the cable, so this return line to me looks like it comes in above 111 ballpark. I call it, 111 and a half or so. And if the RSI doesn't get to 70 with that happening, it'd be the second divergence. So here's your confirmed high right here. Here's your first divergence on the second drive. We did make marginal new highs, but it never achieved this line. So I would expect some selling to come in up around above 111, 111.20. But I've heard people talking about some type of short squeeze. If the dollar gets hit, that could take it to 113 in a hurry. But my look says about 111.30, 40.
Okay.
30 seconds.
Yeah, 30 seconds. Yeah, here we go.
Okay, guys, remember we have some delay, and you will hear first from short charts than from us. But here we are to cover the reaction to the reaction, right?
Yes. Tick tock, tick tock, tick tock.
109.45. Let's see where we'll be afterwards.
Here we go. 1, 2, 3.
So
A lot of people were talking relief rally. I think we've had a relief rally. We'll see if we get more.
Dollar appreciating, hold down. Hike rates. We have a hike, guys.
Yeah, history has been made.
Yeah, and we are here to tell. Okay, the greenback is accelerating across the board. The euro is breaking through 900. Gold is pretty discreet reaction, but it's testing the support we were discussing. And dollar Japanese yen is approaching 22.20, but there we are. I have this rally in the euro dollar. This is the decline between the October high and the post rag low, and we have that 38.2% at 80. So for me, that's the level to break to confirm or to see a more sustainable bear running here. So far, the pair has bounced. Everything has retreat. Let's see what else we have coming on from the Fed.
So what to expect now?
Let's see the dot plots.
Yeah. Gradual rate hikes in the futures, what we were talking about.
We have yields heading up.
Here's the statement. Let's see.
Okay. Information received in the Federal Reserve Open Market Committee. Yeah, what to see there?
My platform's frozen.
They decided to raise the target range for the federal funds rate to 1/4 to 0.5%. The stance of monetary policy remains accommodative after the increase, thereby supporting further improvement and a return to 2% inflation. Access a wide range of information, labor market, blah, blah, blah. Okay, they put an emphasis on inflation. In light of the current shortfall of inflation from 2%, the committee will carefully monitor actual and expected progress towards the inflation goal. The committee expects that economic conditions will evolve in a manner that will warrant only gradual increases in the federal funds rate. The federal funds rate is likely to remain for some time below levels that are expected to prevail in the longer run. However, the actual path of the federal funds rate will depend on the economic outlook as informed by incoming data. So gradual and data dependent as expected.
Yeah.
Unanimous decision.
Unanimous.
I'm not data dependent, I'm codependent.
Yeah, the US
Like
dollar
it?
is stronger.
Yeah, dollar stronger.
I think they did provide this kind of sweeteners. We'll look at inflation. Will be gradual, will be accommodative, but nothing. Let's look at the dot plot. Just a second. I found it here. So no change in 2016, a small change for 2017, and no change in the long run. So we have rates expected, the median in 2016 to rise to 1.4. In 2016, only 2.4 from 2.6. In 2018, from 3.4 to 3.3. And longer run remains 3.5. So a very minimal change in the dot plot in what the Fed members see the federal funds rate in the future. This is relatively hawkish. Of course, we can also see the price on the screen, which tells us the hawkish side. But that's the explanation anyway.
Okay.
Stock market loves it.
Yeah, like
Not
said.
so, not, go ahead, Bill, I'm sorry.
No, sorry. What says you said loves it? And I said like it. Not sure if love is the word, but they are happy. Not love, but like so far because we are not at fresh highs, right?
Yeah, S&Ps are up 16.
Yeah,
That's, I mean,
it
from
is
where they
broken
were
up.
before the statement. Yeah.
I'll also add that the forecasts are relatively steady. They actually raised the GDP forecast for 2016 from 2.3 to 2.4, lowered the unemployment rate from 4.8 to 4.7, but also lowered the inflation, core PC inflation from 1.7 to 1.6. All in all, very small changes, and don't think they make a difference. But the dot plot remains relatively unchanged regarding the federal funds rate, regarding interest rates, and that's relatively hawkish. Yeah.
Yen making any headway? It's right up against your resistance there, Bill.
I thought all gold prices pretty wild, pretty unclear movements, but for most the market has moved a
Pretty
few.
calm.
What?
Pretty calm reaction.
Yeah, but it's pretty much what we're expecting, as the Fed did exactly what the market was forecasting. So I'm not sure if we should expect much more from this, except maybe some further dollar gains, particularly against its European rivals. I just see a bit more of that, and probably dollar Japanese yen. Moreover, if stocks continue holding its gains.
Okay,
Risk
so
on, baby.
Mob here, Mob from the chat is asking, yeah, if it was dovish or hawkish. Yeah, I don't know. What do you think about that for the dollar? I guess he is asking. Or dovish, yeah, the
I
statement.
believe that it was slightly hawkish at the end because they did actually raise rates as promised. And as Yohai was commenting, the outlook for 2016, the
That was
economic,
great, yeah.
it's what it remained relatively unchanged, right? That's what I
Yeah,
understood.
for the federal funds rate. Mm-hmm.
Yeah, so for most, I believe it's slightly hawkish, right? Nothing that we can call really dovish. But not really, oh, whoa, what a positive surprise the dollar got. Anyway, I do believe that it's dollar positive, and there we are with dollar Japanese yen breaking through that resistance, the euro pressuring, approaching 880. I do believe that we are going to see a bit more of the dollar run.
USD CAD is testing that wedge line again. It popped on it, so the dollar is somewhat liking it, wouldn't you say? I mean, it's not.
Yeah.
The yen really likes it.
Yeah.
So we broke through that resistance level that you had, or we're right there in the end? I
Yeah,
think you said, what, 22.25 or something like that?
what?
I think you said 22.20 or so in US dollar yen.
20, yeah, there we are. Take a look at the daily. We have 1, 2, 3, 4, 5 lows around the
Oh,
level,
okay.
but previous high, this low.
Notice centers, I think, is also significant.
Yeah. I guess the dollar rally is more based on that no dissent than the 25 rate hike that we were all expecting.
I see it more on the dot plot, but they raised growth forecasts, which is also positive.
Someone just flashed the pound chart, and I talked about a wedge last week that we broke down out of. I'm gone before the number, but I'd be covering pound shorts down here. I just saw a third drive there.
It tested that low around 49.50.
Yeah, I
Which
think it was a shorter term chart. And
yeah.
S&Ps are coming off a bit from their highs. Where do you get that live S&P chart from? What platform?
Trading view? I
Trading
don't know
view.
if it's live, actually.
It looks like it is.
Okay.
That's free?
Trading view, yeah. I have. I have the S&P and from trading view.
So they're fading a little bit of this action now. A little bit.
Yeah.
You're getting tails and some of this stuff here. Except the euro.
I think that we're also waiting for Yellen's press conference, and only after the markets digest everything, the statement, the dot plot, the forecast, Yellen's press conference, that analysts like John Hilsenrath of the Wall Street Journal will have even a bigger reaction, and then Tokyo opening, Europe open tomorrow morning. This is just the beginning of the historic, the reaction to the historic move. Sorry.
Now the conversation shifts to how much, how fast, data dependent. So from NFP to NFP now, we're going to be real zoomed into, well, what does this mean for the Fed? Are they on hold now forever, or do they need to hike again? So
I do believe that they will go hiking maybe half their meetings for the next year. I do believe that they have 8, right, on the year. So we may bet on 4 rate hikes next year.
4 I think would be
extremely positive outlook for me, but well.
Yes. So there's an old Wall Street saying, 3 hikes and a stumble. So basically what that means is the stock market's okay until they get to the 3rd rate hike.
Yeah, okay. We have
And
until
just,
8.
Just some old school stuff, guys. Old school. Like Turnaround Tuesday, dinosaur language.
According to the CME Fed Watch tool, there are some slight probability in, I think, in March on the next hike, but it's not too strong, so perhaps.
Look at the pound reverse.
Oh.
Forex is never a one-way street.
Yeah.
Maybe I'd be able to calm everyone's nerves down if I sang a song.
Yeah.
Use less leverage when you trade the Fed. Use wider stops so you don't end up dead. Use less leverage or you might lose your head and your account will be dead. Use less leverage. Use less leverage. Thank you, everybody. And if you really want to use less leverage, don't trade. That's as unleveraged as you can get. And the markets will be here today. We're getting nice reversals now, guys. It looks to me like it was a buy the rumor, sell the fact. We had dollar strength for a little bit, and it's coming undone. I hope people took to heart on that when I was talking about the pound about 60 pips ago that they booked it. I didn't have the courage to reverse. I'm already short bearish stock market position going into this, so I have enough heartburn going on right now. But what do you think, guys? Getting a nice little fade there. The gold likes it.
Yeah.
Well, gold's not viewing it as hawkish.
It's replicating Euro's behavior pretty much.
Yeah.
If you take the
Yeah.
candle,
Yeah.
the price action seems they're doing pretty much the same, going up.
Take a picture of the yen. If that's not a stop hunt, I've never seen one.
Yeah.
That's great.
They went for all those stops above those highs. Anyway, looking forward to hearing Janet. I'll shut up for a while.
I'm not sure if we're going to see much more in the market, because they unveiled the statement also, so pretty much we have everything we wanted to have, right? We know everything we wanted to know.
You guys like that use less leverage song?
Yeah,
What?
we've been singing it not for the first time. I think I've heard that hit before.
You know that people have told me that it haunts them and they can't get it out of their head. It's one of those songs. And they don't come to LAR for a month until they can forget the song. I even find myself on them. I also wrote, use max leverage if you want to turn $100 into 10K. But don't be surprised if your money goes away. That's the opposite.
So where do we stand? Basically, 15 minutes in, we're at the same place as we were just before the release.
As always. As always in the release. So the stock market.
No, this is.
The euro has had, isn't it interesting? The euro's had the most muted reaction to the whole thing, range-wise, everything. Don't you think, guys? I mean, look at the candles on everything else compared to the euro.
Not much reaction.
Still a hangover after Draghi, I guess.
Yeah.
But pretty
Yeah, something.
So, and what are the levels to watch in the euro? Bar?
Well, as I was saying a few minutes ago, the 880 support, which is a 38.20% retracement of the October-November decline, I do believe that is the key support. We fell down to that level and recovered, so that's the main support now. And of course, 110 for me is the key resistance. In between, we're just consolidating and not much to say, right? I don't know. I believe that we are going to see a bit more of a dollar upward move.
Yeah. Okay, guys. So, what do you think about doing some recap and wrapping up, or do you want to stay longer?
As you wish for me, no problem. I'm not sure if we're going to see
You're
much
the
more.
chief.
Yohei?
As you wish, Mauricio. You're the chief.
I'm not the chief. Okay, so if you want to start today, Yohei, what happened, what we need to focus in the next few hours, and what is your, and of course, what to see from Yellen and what to expect in Forex.
Well, I think the Fed managed to, well, made history by raising rates and tried its best to deliver a dovish rate hike. That means they did put a focus on inflation, showing worries, and telling us once again that things will be gradual and data dependent. That balances the dot plot, which was relatively hawkish because it hardly had any changes, the raised growth forecast, and the fact that there were no dissenters. I see the, all in all, more hawkish than expected, even though, as I speak now, euro-dollar is basically at the same place as it was before the release. Markets are waiting for Yellen. We'll have to hear from her. She'll be, of course, on one hand, on the other hand, very, very balanced. We'll wait for more analysis and another reaction in Tokyo, a full reaction in Europe, but I think that it's a historic event, and we'll have we'll be talking about this for weeks. If not us, somebody else, because it's a really big change in monetary policy, which diverges from the ECB, diverges from the Bank of Japan, and from quite a few other central banks.
Yeah, it's not only an interest rate hike from the Fed, but also from anyone there in the central bank. So there's some switch from to tightening in a global economy. You know, it's the first things from the future, I think. In switching. So, Valeria, what do you think? What happened and what will happen in the next few days?
Well, I do believe that, as Yohai was saying, it's an historical event because it's the end of an era. I barely can remember the times when we lived in a world with a constant rate hike and not an eternal on hold position from central banks, right? So, despite whatever the reaction we are looking in the market today, I believe it's a major event and will, in the long term, be significant for the greenback and support from the greenback, given that the strong imbalances we are seeing between central banks, right? Uh, I'm pretty sure that there's a lot of room for the greenback to appreciate, particularly against the euro and probably against the yen, the Swissy, the Canadian dollar. Among the first ones I will be looking forward to is. Um, and of course, we are ahead of winter holidays in the North Hemisphere, and the upcoming 2 weeks will be really insignificant for the forex market, and we will see some position adjustment for the books and profit taking, and a lot of wild movements not related to those reactions. So today's announcement, sorry. So anyway, what I'm trying to say is that I do believe that it is quite significant and really dollar supportive, but we are going to have to wait a bit to see it really happening, really materializing. That's it. Sorry.
Okay, thank you, Val.
You're welcome.
Dale, I know you have a really good scoop from the live analysis room. So, what we can expect in the next hours?
I think it's a pretty lousy reaction in the dollar. Basically, to me, it looks like the pros were waiting for this. It was a buy the dollar rumor, sell the fact, lots of tails. Euro did nothing wrong on this for Euro. If I was short the Euro, I'd be disappointed. I didn't get more mileage out of it. Looks like a stop hunt in US dollar yen. And even the strongest against the dollar USD CAD failed again up there, even with crude down. So I view it as a dollar negative event for now. I'm not saying we're going to have a dollar crash or this is going to break the back of the bull market, but I can make a case for the Dixie. Should we take out the 97 level of trading down to 94 or so? So I call this a negative dollar event that most would have expected to be much more positive than it is from where we sit right now at 11:22 a.m. San Diego time.
Okay, so yeah, we all expected more bullish dollar reaction. Okay, guys, so let's see if we have more questions here. Well, about the dollar reaction, but we just said that. Yeah, Will is telling you, Dale, that you are right, that they are accumulating all the lower level position before they rise, making all the institution go for a short cover. Yeah.
Okay.
Okay, so
Do the
yeah,
right thing today, guys, and tomorrow will take care of itself. Do the right thing today.
Always sound advice.
What do you want to say, Yohei?
I said it's always sound advice, what Dale said.
Yeah.
Not only for Forex, but also for life.
Yeah, that's right.
Yeah.
There you go. I enjoyed working with you guys for this historic event. So, we'll all look back and go, where were you on the first interest rate increase in 2015 before Christmas? And remember that I worked with you, Mauricio, and Yohei, and Val. And you know what? I bet our listeners and viewers will remember where they were when they were here for history. So it was great sharing history with you guys today.
Thank you very much. Same here. It was the
and
first
non-events as well, but nice for it to be a significant event.
Yeah, it means that the Fed has done a really good job because they don't want it to a big crash in the.
Yeah, well, it's about time. Let's normalize and see what asset prices are really worth.
That's
what do you
right.
say? Okay.
Yeah.
Yeah, it's a matter of time. But for now, stocks are enjoying that, and I think they has been prepared for an interest rate hike in the last 4 months. So and actually the bank's index is going up strongly. So I think they will like that. So that movement. Okay, guys. So just to let you know that this Friday we'll have kind of big event, the panel. So I know, Dale, you will be one of the presenters. Do you want to share some of your thoughts about this event?
Sure, Mauricio's put together a very good panel. Ashraf Ladi, Adam Button, our own Valeria Bednarik, and I'm missing somebody. What's
Boris Klammer.
Oh yes, Boris is good. Boris is going to be with us. So there should be some very good interchanges between these people, and there have been some great questions ready to go. And I talked to Ivan for the first time. I never knew how passionate he was about the inner workings of the market. He's a real student of the market. So I think that we'll glean some nice macro stuff. Everyone bring their telescope, and we'll be looking out into 2016.
Okay, and you will be there, Valeria, right?
Yeah, I will, of course. I'm eager to see different opinions on what the outlook for next year will be, and discuss all about the currency words and whatever we can expect from central banks. Both. It will be a great mix of technical and fundamental, I do believe. So I do believe it's worth for anyone in the forex market.
Okay,
and Mauricio, there'll be enough forecasts for you and Val to bet a Coke on. Because I know you guys.
I don't remember how many Cokes Valeria owe me.
That's not so much.
I remember Valeria. Well, anyway, it will be a nice event.
Anyway, both of your dentists hope you both win a lot this year, and I'm gonna be saying goodbye to everybody, and see you guys. See you Friday, Val, and
see you soon.
Keep up the great work, the anchor work that you're doing, Yohei. You're a natural.
And, thanks. I'm inspired by you. Yep.
Yeah. Thank you, buddy, and I'll see everyone tomorrow. Okay.
Thank you.
Okay, thank you,
Bye-bye.
Dave. Thank you.
Bye bye, Dale.
All right.
And
Well,
you will be in the panel with us. Well, not in the video, but in the chat, right? You will be covering your thoughts and your
Yeah, I
ideas.
guess I'll pop in with a question or two. Hopefully, I'll be available, and
Yeah,
we've
kill them.
had very interesting participants. So
Okay, guys, thank you very much for joining us today. It has been a pleasure to be with you, Valeria, and with you, Johei. See
Thank
you
you.
next time, and see you, Valeria, on Friday, and see you, Johei,
Yes.
tomorrow in your show.
okay, we'll talk all about what happened and what we think will happen further. Thanks.
Okay.
Thank you.
Okay.
Thank you.
Bye-bye.
Bye
Cheers.
bye, guys. I'm just typing the link in the chat, so you will know where the panel is located and the registration page and
Okay.
everything. See you next time.
See
Enjoy
you.
and
Bye-bye.
drive
See you.
responsible. Bye bye.
Bye bye.